Every time a credit card is swiped, money moves behind the scenes. But most people only see the fee and feel confused. Today I'll break down exactly why credit card fees are high and where the money goes. Simple and clear. Big myth: Visa or Mastercard keeps all the fees. That's not true. The fee is split between three parties, and the biggest share usually goes to the issuing bank, the bank that gave the customer the card. Think of fees in three buckets: interchange, network, and processor. Interchange is paid to the issuing bank. Network fees go to Visa/Mastercard for the rails. Processor fees go to the company providing the tech and support. Interchange is the largest part. Why? Because banks take the biggest risk. They cover fraud losses, credit losses, disputes, and they fund rewards programs like cashback and points. Fees change based on risk. Online purchases usually cost more than in-store. Higher fraud exposure increases costs. And premium rewards cards usually have higher fees because rewards are expensive. Network fees pay for the payment highway, routing transactions, maintaining security standards, and keeping systems reliable worldwide. Networks don't lend money, they move information and settle traffic. Processor fees cover the tools merchants use: terminals, online gateways, reporting dashboards, and customer support. This is also where pricing models differ: flat rate, tiered, or interchange plus. Here's a simple example. On a $100 sale, the total fee might be around $2, $3. Most of that goes to the issuing bank. Smaller pieces go to the network and the processor. This is why Visa takes it all is wrong. Fees also pay for protection, fraud detection systems, chargeback handling, cybersecurity, and constant monitoring. Those systems cost money, but they keep payments moving safely. So why do merchants accept cards? Because customers spend more, checkout is faster, cash handling risk drops, and online payments become possible. Many businesses make more revenue with cards, even after fees. Common questions. Rewards cards cost more because perks must be funded. Online fees are higher due to fraud. Flat pricing looks simple, but can hide what you're really paying. Key takeaway: banks take the most risk, so they get most of the fee through interchange. Interchange is the biggest component, and when you understand the breakdown, you can negotiate smarter. Disclaimer: this content is for education only. It's not legal, financial, or compliance advice. Always consult qualified professionals before applying anything to your business.